Welcome back to the Value Investors Club. I'm your host, Timo Wunderlich. Let's get right into it with VIC Readings, the format where we look at the best value investment recommendations by the best of the best value investors out there. Today we have INTUIT Inc., ticker is INTU. It's a short recommendation. Price at the point of filing is $410.78. Let's get right into it. This is not a recommendation, not advice. Please do your own diligence before investing into anything. And like I said, let's get right into it. Please write down in the comments below if you have, will, or why not invest into Intuit Inc. slash the short recommendation. Um, Description short into. Intu is a provider of financial management software to small and medium sized businesses and consumers. The Mountain View, California based company operates three core franchises. Number one, QuickBooks SMB accounting software. Number two, TurboTax consumer tax filing software. And number three, Credit Karma, a consumer financial management platform. In summary, Intuit's recent acquisitions of Credit Karma and MailChimp, which we believe were made to mask slowing growth in the core business, have introduced an underappreciated level of economic sensitivity, lending MarTech to a historically low beta business. Whilst Intuit dramatically lowered guidance for Credit Karma from plus 10 to 15% to minus 15% to minus 10%, consensus for FY24 will likely have to come down further as the economy slows and lenders slash card issuers gradually tighten their credit books. Core QuickBooks online accounting revenue fell short of consensus in the first quarter, suggesting that the company is beginning to see signs of weakness within its SMB customer base. As we move past the price increases enacted in F1Q, it's likely that weakness becomes more evident in reported results. Risk slash reward is very attractive given the current EPS multiple on street expectations that have a decent amount of risk. Details. Credit Karma, 15% of revenue. Credit Karma is a financial personal finance platform that was acquired by Intuit in December of 2020. Its primary source of revenue is upfront fees paid by lenders upon the successful underwriting of a loan or the issuance of a new credit card. Credit Karma is a business that thrived in a low interest rate environment but relies heavily on non recurring revenue and therefore introduces an acute level of economic sensitivity to Intuit's business model. In terms of the business performance, just a month after management reiterated its 10 to 15% guidance of Credit Karma revenue growth at their financial analyst day, an internally circulated memo was leaked to the press noting that Credit Karma was pausing almost all new hiring due to revenue challenges. In the first quarter, the company reported $425 million in Credit Karma revenue, plus 2% year over year as reported. But we estimate minus 9% year over year organically as the company reclassified an estimate of $40 to $45 million of its Mint brand revenue into Credit Karma results during the quarter. During the company's first quarter 23 call, management reduced the guidance for Credit Karma to minus 15% to minus 10% year over year, implying an exit rate of 340 million or minus 28% year over year for the core business ex Mint. With card issuance slash personal loans likely to continue to gradually tighten into FY24, the consensus applied a reacceleration in growth appears highly ambitious. Instead, we assume that Credit Karma continues to taper off back towards F3Q21 levels of $316 million in quarterly revenue, implying 12 plus percent downside to next year's consensus numbers. TurboTax, 30% of revenue. TurboTax, Intu's core consumer tax franchise, receives arguably the least amount of scrutiny from investors, which is surprising as it generates nearly 40% of operating income. Over the last 3 years, the company has benefited from a material reacceleration in paid unit growth from 0.4% year over year in FY 2019 to 5.8% year over year in FY 2022, which can be attributed in part to the 10 million increase in total returns filed as stimulus payments were determined by prior year tax returns. Given this dynamic, we see an increasingly high likelihood that unit growth will be flat to down. That compression will only be exacerbated in FY24 as unemployment rises, when the IRS also expects that total returns to be down 1.6% year over year. The other side of TurboTax revenue is a complex mix of SKUs, pricing, and discounting, which boil down to an average revenue per return ARPR. The last few years, ARPR have benefited from upsell of the TurboTax Live offering, which allows fillers to consult with a live tax expert for a list price of $89 plus. However, since its launch, the incremental penetration of TurboTax Live has fallen each year, with only 400 basis points incremental penetration added last year versus 640 basis points in the prior year. We expect penetration to continue to plateau, which is supported by INTU's decision to raise list prices on Live by 5 to 13% this year. Realized increases will be lower due to discounting. We expect this to only reduce the attractiveness of the offer versus self service. Outside of TurboTax Live, we expect the core ARPR growth to be flat to down, given mix shift pressures from downgrades to Deluxe $59, from Premier $89, based on lower equity and crypto market participation. Factoring all this in, we arrive at 4.5% paid ARPR growth on 35.3 million paid filings, or $4 billion in revenue versus consensus of 4.3 billion. Small business and self employed, 55% of revenue. The small business and self employed segment encompasses QuickBooks Online accounting, online services, and QuickBooks Desktop. Like Credit Karma, as recently as September, management continues to insist that QuickBooks is not facing any macro pressure. Yet, despite a 6 to 20% QBO price increase, which began in July, the core QuickBooks Online QBO software missed consensus numbers in first quarter, decelerating by 500 basis points quarter over quarter to 28.7% year over year growth, which we see as a clear indicator of lower gross ads and rising churn. The other portion of QuickBooks, payroll and payments, has remained resilient thanks to a 25% price increase also enacted in July. However, given the outlook for rising unemployment and broadly slower SMB transaction growth, as indicated by Moody's Cortera data, we expect that online services will also decelerate as we get further past the price increase. Downside. Where do we think INTU goes from here? Given downside to consumer tax, increased signs of stress within SMB, and the potential for prolonged weakness in Credit Karma, we believe this business warrants a lower multiple than Microsoft, which is currently trading at 25x NTM EPS. We know that management's EPS guidance is significantly more back end weighted than in prior years, and we arrive at our own adjusted EPS estimate of $13.16 this year, or 4% downside versus street. Our conversations with several large holders have pointed to price targets at or near current levels, which is supportive or favorable risk reward skew for the short. Catalyst earnings / guidance, consumer credit performance, IRS tax season updates. Thank you very much for tuning in, and please tell me down in the comments below if you will do this short or not, and why. And see you next.